And if we see OPEC disregard the dollar as its sole method of payment for oil, you will see very, very quickly what I'm talking about as a good portion of the world dumps dollars. They come flooding home, interest rates spike, and the three pillars of wealth collapse along with the dollar. That's your great reset.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Welcome back to Liberty and Finance. We're always glad to have this returning guest every Tuesday for our weekly market update. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us this Tuesday, June 28th, 2022. Andy, thanks for coming back on Liberty and Finance.
Great to see you again, Dunnigan. It's amazing when you do something every week, how fast Tuesday rolls around after Tuesday disappears. And, it seems like yesterday that I was preparing for last week's show, and here we are again Tuesday. So I don't know, maybe it's just the time seems to be moving quicker to me these days. Anyways, as always, it's great to be here, and thanks for having me.
Well, I think for those who missed last week's special, make sure you go back and look at it. It's called 8 Major Stories that the mainstream media just missed, because Andy had done a ton of research about some truly groundbreaking and basically tectonic plate shifting changes in our macro geopolitical, financial, monetary world that are in line with some of the themes that he's been bringing up to us over the last year or so at least. And the viewers' questions are uniformly outstandingly supportive and enthusiastically appreciative of the research you do, because people are looking for answers. This is a confusing time. People are seeing that the stock market, which has basically marched upward for 40 years, is now roiling and churning. And we've had the weirdest looking first half of a year that we've had in decades. Spikes in money printing, spikes in interest and inflation and all kinds of things. People are really concerned. What direction are we heading here? What's changing? So they're looking to somebody who's going to tell them not just the same old pablum that they're going to get on the mainstream. That's why they're here on Liberty and Finance. And I understand you've got some follow-ups from some additional research you've done based on some of the stories from last week.
Just a couple, but your comment of a 40-year uptrend in the stock market, it is parallel with a 40-year downtrend in interest rates or a 40-year uptrend in bond prices. So you're talking the greatest bull market run ever in stocks and in particular in bonds. And, that ride comes to an end when interest rates start to move up. And that's really the theme. My macro perspective is of rising interest rates that are not really at the hand of the Fed. But I want to talk about two things. And one is, the Fed tells us they're going to get tough on inflation. Now, we talked a little bit about this last week, but I just want to hammer home one thing. There's a group a research group in a think tank in Washington who just came out and said that the 13.5% inflation rate that we had in 1980 would be 9% if calculated by the way we measure inflation today. So in other words, the way of saying that is that the 9% inflation we have today is actually 13.5% by the standards that were in place in 1980. And Paul Volcker got tough on inflation by raising the federal funds rate to 19.75%. Our Fed chairman, Powell, raised it 75 basis points to 1.5%. That's not getting tough on inflation. But the part that really irks me is that we were told that they were going to start to sell off their balance sheet in June, and yet for the last 3 consecutive weeks, the Fed balance sheet has actually increased. So they're continuing to buy. And my theme, or what I've been talking about, is that the Fed doesn't want to light the fuse, right? The Fed wants to find a villain, and weaponizing the dollar and pushing Russia into SWIFT. There's your villain: Russia, OPEC, China, the BRICS nations in general. And we've talked a lot about the petro yuan bond and also the Chinese digital yuan. And my feeling is that the biggest threat that we face as a country is moving away from the petrodollar, which gives us our dollar hegemony. Our world reserve currency status is the protection of the Saudi kingdom. We've talked at length about how Russia and China is stepping in on that, with China and Russia, in essence, protecting Saudi Arabia and Nigeria. And Nigeria because it's part of the Belt Road, Saudi Arabia because Russia struck a deal with both Saudi Arabia and Nigeria. Nigeria has subsequently agreed to sell their oil to China for yuan, and we've talked about how that is immediately convertible, the petro yuan bond, into gold on the Shanghai Gold Exchange. So all of these pieces have been put into place. And, you know, when we had our last talk, I told you that I thought that because they've already done over 10 billion in transactions on the new Chinese digital yuan, part of the Belt Road Initiative settlement, that I believe that these nations would coalesce and use this technology, this technology that has already been, I guess you could say, perfected by the Chinese, to where almost, last I heard, was close to 12 billion in transactions had gone smooth on the new digital yuan, that they would coalesce and issue a currency on the back of this technology that the Chinese have rolled out with their central bank digital currency. And ultimately, I feel they'll peg it to gold. These are the largest gold producing and accumulating countries in the world: China, South Africa, Russia, India, etc. So with that being said, you know, again, hammering home my point, the Fed doesn't want to light the fuse. They're talking a big game. A big game would have been raising interest rates 1,000 basis points to 10%, not 75 basis points to 1.5%. Talking or action would have been selling off a good portion of their balance sheet, not actually adding to it 3 weeks in a row when they told us June is when they'd start selling it. So that's in place. So my theory of the Fed wanting to find a villain, I think, is accurate. So right after we did our show, the day after, I'm going to pull up a piece of paper here from, well, I don't even know what news source that is, but you can see it there. It says, BRICS developing new global reserve currency. It will be based on a currency basket of the 5-nation bloc, the BRICS, according to the Russian president. President Vladimir Putin said on Wednesday that the BRICS countries, Brazil, Russia, India, China, and South Africa, are currently working on setting up a new global reserve currency. The issue of creating an international reserve currency based on a basket of currencies of our countries is being worked out, he said, at the BRICS Business Forum. According to the Russian president, the member states are also developing reliable alternative mechanisms for international payments. That is the SIPS system that we talked about, the cross-interbank payment system. So earlier, the group said it was working on establishing a joint payment network to cut reliance on the Western financial system. The BRICS countries have been also boosting the use of local currencies in mutual trade. This is my point. On everything that I've talked to you about for the last year is de-dollarization. We have created an environment where every one of those countries, other than Russia, is saying, are we next? Are we going to be the ones that are next sanctioned? It's time to move away from, in their minds, the hypocritical West. They're trying to, I think, break the dollar hegemony. And the fact that Saudi Arabia is now negotiating to sell their oil for yuan, the fact that Nigeria is already doing it, tells us the door's already been open. And it's just a matter of time and severity. We'll see how it plays out. But the fact that both the Fed is not getting tough on inflation, even though they claim to be, and the BRICS are talking about this coalescence of forming a mutual alliance. That mutual alliance not only is currency backed, but it's militarily backed. So it's one thing to mess with Saddam Hussein and Muammar Gaddafi when they threaten to sell their oil for gold or euro. It's another thing to mess with China and India and Russia and the whole Eastern world. And, you know, I just think that these things are starting to happen. I've talked to you at length about a systematic linear event, a chain of events, and it keeps on building. And I hope I'm wrong. I truly, honest to God, hope I am wrong. But when you see them come out and just flat out tell you we're working on a new global reserve currency, what he's not saying to you is that it'll be a central bank digital currency backed on the success of the new Chinese digital yuan. And we're all, because we're all the biggest gold producing countries in the world, we're going to pledge gold and we're going to have a currency like Zoltan Pozsar says we're now in Bretton Woods 3. a currency system based upon commodities, not based upon a mountain of debt. So those are the two things I wanted to say, just to put an exclamation point on last week and really everything we've talked about. Open your eyes, people. Please open your eyes and see that the Fed is not going to light the fuse that blows everything up. Instead, just like it's as stupid as can be when our president tells the world that this is Putin inflation, and we all know that inflation is always a monetary event. It's creating too much money. The supply chain issues and all the other nonsense, the periphery, yeah, that adds fuel to an inflationary fire. But inflation is an increase of the money supply, period. And the Fed has gone on a money printing rampage over the last several years. So it's happening. And the fact that they're not getting tough on it, the fact that they're adding to the balance sheet, and the fact that the BRICS nations are actually moving forward with what was a theory to me based upon all of these events, I don't know if it frightens me or it makes me feel somewhat good that I'm not barking up the wrong tree. I don't know how I feel other than to say I do believe that it's happening and it's real, and that I will go to my grave with that. I think this is where we are heading.
The image that comes to my mind is that for years since we started our channel, Reluctant Preppers, back in 2013, and the slogan of preparedness is, I'd rather be 7 years early than 1 day late. The image that comes to mind is of us and our loved ones and our neighbors and our friends and our countrymen and people of the world being on the train track, and a train is coming. And you can see, first you could hear the whistle in the distance. Now you can see the headlight. Now you can feel the vibrations on the tracks. And now it's starting to knock some things off the track in the distance. And you've jumped off the track. You've dragged a few of your family members off the track, but the train is coming. You can see it now. Does it make you feel good that you were right? Does it make you feel horrified about those people that are still on the tracks? It's a mixture. It's a strange mixture of feelings. You're right. There's a kind of a corroboration of sanity that, like, yes, I can trust my judgment. I can trust my gut. I can trust my sense of things. That's good. It's good to feel sane. It's at the same time, sanity can be a concerning thing when those we all deeply care about and those we don't even know are in harm's way. So, as much as we try to shift the focus to living a good life and helping as many people as we can, fighting the good fight, getting the word out there, we're trying to do what we can to help maximize the good and maximize the amount of people to be able to survive and thrive what's coming. But you're right, it's a very mixed feeling to see those events playing out in the way that your gut told you they were likely to.
It does, and it is. And I have kids. My youngest is 15. I have one kid moving to Manhattan to start a job in accounting. I got another kid who's just going to college right now. And on one hand, I feel blessed that I own a precious metals company and I have the ability to get out there and talk to people about what's happening to protect my family and to help others do the same thing. On the other hand, I'm very concerned that the life that we have all grown to appreciate here in the United States is going to change. It's going to change because the privilege of being the world reserve currency has allowed us to live well above our means by the good graces of our foreign creditors, who I think have had enough of the mismanagement of the world reserve currency, of our sanctions, of our, I guess you could call it hypocritical actions where, from their perspective, I can see how they would think we're hypocritical. And when you own the world reserve currency, it is not for you to tell others who can and can't use it. The minute you do that and weaponize it, you've opened the door. And I think that's where we're heading. So once again, just to reinforce, you buy gold and silver because it's wealth. You don't buy it to get wealthy. It is wealth. And that is the foundation from everything that I talk to you about and all of my clients. I'm asking people to own gold and silver, not to look at it as an investment. There's been far too much greed in the ethos over the last several years, whether it be on equities, on real estate, even on bonds, and especially on cryptos. And so much of what has happened in terms of investing is singularly focused on getting wealthy. And that same motivation will increase in spades when people realize, hey, it's more about return of my money than return on it. And fear is a very powerful motivator. I'm not trying to frighten anyone. I'm frightened. All I'm simply saying is that the facts that I see point to to the fact that we should be concerned, and you should protect your family. And that's the whole mantra of what your station is, and I'm glad to be here. So anyways, I know you had some questions you wanted to ask me, and I'm happy to jump on and get those answered right now.
Great. Yeah, we've had some very cogent questions submitted by clients who've purchased metals through us and have watched the show every week. And I was trying to summarize this one, but I thought, you know what, it's so well written, I'm just going to read it in its entirety. We've got another one after this, and we have some questions for you right before the special. Bruce and Cheryl ask, as the world and its economies are hurtling towards meltdown and governments are salivating at the chance to reset the financial system with central bank digital currencies, CBDCs, so that they can gain complete control over their citizens, how does gold fit into that scenario? Does it become an underground source of currency for barter? Would the governments who would like to monitor/tax every transaction allow gold to be used in any large transaction, let alone convert gold into a CBDC currency? Do you see them outlawing gold as Roosevelt did in the 1930s? Would it truly then become a relic?
So the last question first, I don't think they'll outlaw gold. I've said this for a very long time. If you have any intention of maintaining the world reserve currency, or even on that level, if someone were to rise to challenge, if you have any intentions of being the center of free trade in the world, if you can even call markets freely traded any longer, but if you have the intentions or the aspirations of maintaining any sense of normalcy in the financial markets, the last thing that our government could do would be to activate eminent domain and take physical gold from the populace, which is really the pimple on the elephant's rear end. In 1933, everyone owned gold. And the picture behind me over my shoulder here, as we've shown before, that one up there of Roosevelt, that's him, the executive order, that's a $10 gold coin and a $10 currency certificate, along with the executive order for him taking everyone's gold in 1933. Everyone owned gold in 1933. Now no one does. It's such a very minute, as Rick has said, as we talked before, 1/2% of the entire matrix of financial assets in this country is attributed to gold. That's nothing. And so it wouldn't be worth the backlash. It would be the unintended consequences of confiscating gold, I think, would be extraordinary when countries like China and Russia are telling their citizens to own it and accumulate it. Instead, I think as I've mentioned before, what they will do is they will nationalize the ETFs like GLD and SLV. And we can debate all day long about the veracity of the metal held in GLD and SLV and is it all there? Has it been encumbered or what? I do believe there's a good deal of metal in both. I mean, SLV is if we hold them true to what they're saying, they're like the second largest stockpile of silver in the world, and GLD fourth or fifth largest stockpile of gold. SLV is held by, or the administrator is JP Morgan. I mean, the fox guarding the hen house. And it is HSBC Bank that is the administrator of GLD. Again, another fox. They can come in on a Friday night, nationalize those two accounts, not do anything about taking physical metal from people. The prospectus doesn't allow the average person to take possession of the metal anyway, so they could pay everyone what their share price was at the close of business Friday and tell them, hey, you can still buy physical metal. We're just closing these accounts. And they would be sitting on a massive stockpile of gold and silver without violating civil liberties or breaking any laws. They can still look the world in the face and say, what? We didn't take from our citizens. We closed a couple of funds. The prospectus gives us the right to do it. I don't think they'll take gold and silver. I really don't. As far as converting to a CBD, a central bank digital currency, yeah, why not? I mean, you could argue the dollar is already a digital currency in one respect. I mean, take a poll of anyone under 30 years old, and if they got $50 in their wallet, I mean, it's 1 out of 100. If that, young kids don't pay for anything anymore with anything other than iPhone with Apple Pay or Google Pay or a credit card. Cash is starting to kind of wean its way out of the system anyway. But I think the whole idea would be to transition. If we look at the Chinese digital yuan as an example, they rolled it out parallel with their renminbi, with their paper currency. And so it's been a parallel deal where it's gaining more and more and more acceptance to the point where there's somewhere near 12 billion in transactions already on the digital yuan, but they haven't outlawed cash yet. And so it'll be in my opinion, they want to transition to the central bank digital currency. So selling your gold and transitioning into a central bank digital currency will be something that they want. And so will it be an underground currency? I don't think so. I mean, physical gold always gives you privacy, and you could argue that a central bank digital currency removes all the privacy. These what if questions are always impossible to answer, but what I will simply say is you do the best you can. You know the old adage, hope for the best, prepare for the worst. I don't see any other way to prepare for the worst than to have physical metal. And if it ever were called in, it would suck. But the eminent domain says they have to pay you a fair price. Roosevelt confiscated gold at just over $20 an ounce and then revalued it to 35 or devalued the dollar by 40%. Could that happen? Yeah. I mean, do you want to be a fugitive or not a fugitive, a criminal in a black market? That's your option if you do in that environment. But you'll have options when others don't have any. The bottom line is that I don't think converting it into a CBDC or physical gold being confiscated is primary concerns right now. Quite to the contrary, I think it is a life raft in a world of uncertainty. And again, we hope for the best and hope that we don't see government impose these type of fascist, decrees where we can keep our metal. And again, if Rick is right, Rick Rule, us 1/2 of 1%ers will be not worth the backlash globally of confiscating physical gold for the tiny little amount that they would get, which doesn't even amount to a couple hours of money printing when the rest of the world, including communist countries, are actually promoting it and telling their clients to own it. Or their citizens, excuse me.
Bruce and Cheryl have a follow-on question that I think is quite interesting to a lot of our guests, a lot of our viewers, because it talks about a strategy around trying to position yourself so that you can take advantage of volatility that may show up to acquire more metals, but will there be anybody to be had at the time? They say, secondly, Harry Dent, David Hunter, Peter Schiff, Michael Pinto, David Stockman, James Rickards, and others have all forecasted the demise of the stock market bubble. Some have stated that it will be followed by the housing and bond bubble demise. Although they all seem to have their own opinions concerning the route, they also point to the same destination. In regarding gold in these upcoming events, Mr. Dent predicts that gold may lose 50% of its value and recommends long-term U.S. Treasury bonds. Mr. Pinto envisions gold, like all assets, being sold off in desperation as the market seeks liquidity during the meltdown. We lean towards Mr. Pinto's view and are holding cash for that purchasing opportunity. We realize there will be a small window of time when the majority of gold owners may be selling gold and a minority may be waiting to take advantage of the circumstance. With that said, in such a turbulent time, what does Andy foresee in regards to supply and on-hand stock before the wave of metals buying demand comes rushing back?
Well, that kind of goes hand in hand with what I've been saying on your show for a very long time. First and foremost, Harry Dent, with all due respect, he was right one time, and I think that one time was 1987 when he called the stock market crash. He's been wrong continually for years. He's been calling for gold to collapse and to go to $200 an ounce. He's been saying this forever, and I'm tired of defending or taking the counter of his opinion. If he tells you to buy treasury bonds in this environment, well, I guess the only way that turns out to be a good strategy is if we see a Volcker moment. And what he would be talking about is something called Gibson's paradox, which is the inverse relationship between real interest rates, not nominal, real interest rates, that is the rate after inflation is calculated against it, and the price of gold. They're supposed to move inverse of each other. And that's why you get analysts say, well, rates were up 0.75%. That's not good for gold. That's crap. Because the real rate of return right now is still negative 6% on a 10-year treasury. So when Volcker raised rates on the federal funds rate to 19.75% above, well above the rate of inflation, he killed not only inflation, but also the gold market, because the rule of 70 seconds says you take the rate that you are being charged or are charging and divide it into 72. So call it 18% in 3 years, your principal doubles. So yeah, people will buy treasuries if you see double-digit rates on treasuries. But where and that would be bad for gold, right? But here we are with rates where they are. What's different this time, with all due respect to Mr. Dent, I think this time we will be talking about a currency collapse. We will be seeing an environment where if rates rise significantly enough, in my mind, it will be on the back of dollars being dumped, not the Fed getting tough on inflation. We've already seen that the Fed isn't getting tough on inflation by adding to their balance sheet for 3 weeks in a row, right when they told us they're going to be selling assets off their balance sheet. They are not getting tough on inflation. But if my thesis is correct, that what's happening around the globe in unison, in coalition, away from the dollar, in moving away from the petrodollar as the singular world reserve currency, like Putin just said, they're working on building a joint world reserve currency, then that's where it all starts. And that means that if you realize that every country on the planet has had to own dollars since 1974 in order to buy oil, if most of those countries don't want to own dollars, and if all of a sudden OPEC opens up the ability to purchase oil in other currencies, bang, those currencies get dumped. The dollar dumps, interest rates spike, stock market collapse, bond market collapse. And that's why, what Mr. Dent is saying is very, very dangerous until you have that collapse and interest rates at 18%. Yeah, then you buy treasuries, but is there even any faith at that point in the dollar, in the United States government, in any of these markets where we would normally put funds traditionally? So it's different now. In previous cycles, we weren't talking about the end of the dollar as the world reserve currency. We were talking about, maybe problems with credit contractions, or whatever the issue was. It wasn't about the dollar going away. And if we see OPEC disregard the dollar as its sole method of payment for oil, you will see very, very quickly what I'm talking about as a good portion of the world dumps dollars. They come flooding home, interest rates spike, and the three pillars of wealth collapse along with the dollar. That's your great reset. So I don't follow Mr. Dent at all into what he's saying. In fact, quite to the contrary, I truly believe that where we are heading, it is he or she that loses least wins. And that's the name of the game. And, you can look at all of the equity indices, you can look at the cryptocurrencies. They've all been incredibly volatile all year. Gold has just been in a tight range. It's not volatile. Cryptocurrencies are not digital gold. The equity markets are still near their top range, and as rates rise, they collapse. The bond market, arguably, and with all due respect to Mr. Dent, is the mother of all bubbles. Because as rates rise, you have nowhere to go in the bond market but down in terms of the bond prices. So I don't know. In my mind, you own gold and silver because it will be the asset that loses least in an environment where everything blows up. Now, in terms of huge margin debt and selling gold and silver or throwing the baby out with the bathwater, okay, whatever. I've never really believed that rush to liquidity nonsense. It's the same manipulation that we've seen over and over and over again. Whenever something bad happens, like we fire, the first missiles in Desert Storm or whatever, they collapse the price of gold. It's been the same. It's the canary in the mine shaft. It's all an illusion. It's all misdirection. So yeah, maybe that's what they'll try to do. But just like every other time before, they knock it down and then it goes straight back up. So trying to time this market is very, very difficult. And to the listener's main question, will there be anything available? I've been saying forever, it's going to define this industry, the inability to get product. We have grown. The choir is now, as we've said before, now all the way out into the audience. And so the choir has grown quite a bit. But the theater is a tiny little building in the center of the town, and the whole town has no idea what's going on in the theater. When the whole town says, oh my God, we got to go to that show, and we got to get some gold and silver, bang, like that, it's over. It's a tiny, tiny, tiny little market, right? And, like I've told you before that there are some deals that we were working on, some very large deals. Right now, we're working on a deal that could be in excess of $50 million. And when that happens, look, the U.S. Mint just came out and said they've cut in half their allocation to gold for the rest of the year. Are we going to start to see the same thing with gold eagles that we've seen in silver eagles? if all my distributors said getting Eagles will be sketchy, is what I was told. I mean, if you can't do an order for 50 million really easily, what happens when that's 5 billion, when everyone in the country is scrambling to get gold? I'm telling every one of you out there, yeah, there's product available now, and there's been product ever since I've been saying that ultimately there won't be. I'm looking out there. I'm not looking here. I'm looking out there. And I see a period of time when gold is viewed as a life raft. You and I, Dunnigan, and the people that we talk to, they know that they're sitting on a comfortable life raft. They get it. Everyone out there doesn't. And the people who comment and say he's talking his book, it's always available, blah, blah, blah. Okay, fine. Don't take my word for it. But all I have to say to you is if I have this much trouble filling a $50 million order where I literally will wonder, where am I going to get that kind of a gold? As one of only 27 U.S. Mint authorized resellers, I think that should answer the question. Yes, when it becomes obvious, it'll be too late, just like anything. And so you ask Rick Rule again, and I point to Rick because he's a legendary investor in this industry, and I have tremendous respect for him. And he'll tell you the biggest gains he's ever made in his life or in his career has been when everyone was saying, why would you do that? Or when markets were moving away from what conventional wisdom would say, jump into. And if you want to protect yourself from what's coming, you cannot wait until it's obvious. You can't. You have to take accountability, and then you have to make this move, jump in the water when everyone else is sitting in the sun on the beach and thinks you're crazy for going into the cold water until it becomes real obvious that that's the place to be. It's too late.
We also had a question. You just mentioned that Miles Franklin is one of the only 27 Mint authorized resellers in the country. There was a question submitted last week, which we didn't have time to get to, which was from a viewer saying he had seen on another channel that the Mint authorized buyers, which is even a smaller group, I understand, is able to procure American Silver Eagles, for example, from the U.S. Mint for between $2 to $3 range, whereas the Mint authorized resellers, we're buying them back from the public at $7, $8, whatever dollars more over spot. It was been as high as $9.75 a month ago. So how is it that Miles Franklin is facing those kinds of premiums from the higher in the food chain from the Mint, and also when we buy back from the public? Is it true that there are these so-called Mint authorized buyers who are able to get Eagles at significantly lower premiums?
They are, for sure. There are a handful of them, and you have to pledge at least $50 million to the Mint to become a one of the 6 primary dealers. And I'm going to defend them for a moment. And I have no incentive to defend them other than to say they see what I see, and they see a incredibly difficult time getting product. So if they sell out everything they have and make $1 an ounce or whatever, instead of jacking it way up to where they're selling them for, what are they going to do when they can't get any more product? And so premium is a function of supply and demand. And I've been very consistent on this channel in telling the people that Eagles are too expensive, Silver Eagles. And I have in stock 70 or 80,000 of them right now in stock. People want them. I have them right now, 2022 ZAM backdates. But I don't tell the public to buy them because the premiums have been so high. And that's to my own detriment, where I'm sitting on a huge amount of Silver Eagles going nowhere. And I can't hedge that premium. I can't bring myself to sell them, but that's what I am paying for them. And I'm buying them back from the public for $7 or $8, as you say, over spot. The point of it is that you have to wonder, if you're the primary distributors, where's my next lunch come from? And so if you're uncertain, and they have been incredibly inefficient, the Mint has, putting out far less demand or product than is demanded, I don't blame them for doing it, because when they sell out, getting product is not a sure thing. And getting gold Eagles has always been no problem at all. Well, now the Mint says, oh yeah, and they haven't even sold a ton of gold Eagles. Well, we're going to cut supply by 1/2 for the rest of the year. Do they see something coming and they're trying to mitigate? I don't know. But all I can simply say is that the U.S. Mint is the only mint that they're doing this with. Those same primary distributors are primary distributors for the other major mints as well. And so, they're not doing this with Britannias, Krugerrands, Philharmonics. They're not. And so or maples even, which are a little higher, but they're not. And it's because the U.S. Mint has been horribly inefficient. And if they were to sell out at a certain price, they're not getting more. So this is a market-driven phenomenon. This is supply and demand. This is capitalism. And if you don't want to pay those high premiums, buy something else. And the same thing is true. When I buy back from the public at $7 or $8 over spot, I can't hedge the premium. I'm naked exposed to that premium. And so are they, I guess, if they're buying back as well. So anyways, they may pay $3 or whatnot from the mint. They're going to pay me, if I sell back to them, $7, $8 over. So they're making it while they can, where they can. And I think they see the same issue I do, where supply becomes a problem. And this is how markets work.
I guess one thing you didn't say there, but I think is worth restating, is that Miles Franklin is not making those huge high single digit or beyond markups. We're in the very low single digits. And you mentioned a couple of times premium hedging. That's the last viewer's question we wanted to touch on that we got submitted this week. Dan asks, Andy, I have heard you say many times that you can hedge the spot price of metals, but not the premium. So here's a hypothetical question. Suppose the spot price of silver is $50 and the premium on a 1 ounce Silver Eagle is also $50. Can you continue to buy and sell American Silver Eagles where premiums equal 100% of spot?
Yeah, that happened in 2008. In 2008, and this was written in Chris Marcus's book, The Big Silver Short, or The Big Silver Short. So anyways, in 2008, we had $21 silver. It fell to $9 in about a week, and it lost 60% of its value. And when the markets finally opened up, you were paying $18 for Silver Eagles, and 8 to 12 week delivery delays just to get them. You're paying 100% premium, 100%. And I envision a period of time where you will see that once again. So yeah, we can. You'll see widened spreads in that case, where the bid and ask spread are much wider on high premiums like that, because the dealer is exposed to that. So if I have, just so people understand, if I have 10,000 ounces of silver in my warehouse, I can sell 10,000 ounces on paper. So one goes up, the other goes down commensurate. We're always market neutral to the amount of silver, but when you add that premium on there, there's no way to hedge it. It puts us at risk. It puts anyone in this industry at risk. And there are companies out there who claim they don't hedge the metal also. Maybe that's true. If it is, that puts them at risk. This is not a business that is for the faint of heart. You have risk involved as a dealer. And you know, those 90,000 Silver Eagles I have, you could argue that I have a minimum of almost $700,000 in premium risk that I can't hedge right now, just in that little portion of my inventory. So yes, they'll still transact, but the spreads will be wider, so that if they're $50 premiums, you may only get 30 when you sell it back. So there's that $20 spread in there where you have a little bit of cushion, and that's commensurate maybe with the amount of risk you're taking by offering this to the marketplace. So anyways, yes, the answer is yes. It'll have to be probably a major company. This is the kind of environment that would put every small coin shop out of business like that. Every small business out of business quickly, because you have to have the bankroll to be able to do it, and you have to have the contacts to be able to do it, and the ability to move product fast enough so that when you do take in something from the community and pay a big $50 per ounce premium on a mint box of 500 coins, you know, that's 500 times 50, that's $25,000 premium that you'd have just to pay on the box. You'd have to have a big spread. So yes, but it will shrink the size of this market incredibly to just a handful of players.
I guess to corroborate what you just said about what happened in 2011, remember it also happened in 2020. We saw that in the March of 2020. Maybe you want to tell that one again. That's more recent in people's minds.
Yeah, in 2020, the price of silver went down to $12, and you were paying $20, $21, $22, $23 for anything. In some cases, you were paying a higher premium, like $13, $14 premium for Eagles with $12 silver, over 100%. So the answer is yes. It's not a market that is pleasant to be in, but yes, that will happen, I think, ultimately. And because I could argue the premiums when normal are too low. And so we haven't really found equilibrium between supply and demand where I think we are ultimately heading, to be honest with you.
Yeah, I guess it all comes back to, and this gets back to the preparedness, scenario planning, thought experiments. It's like, what is the real risk that we will or won't have availability of anything, whether you talk about toilet paper, food, water, fuel, all kinds of things. Do you really know, people? Do we all really know what the risk is that we'll have access to those things? And what would be the correct risk-adjusted premium we should be paying in all of those areas if we knew the real risk? But we're all guessing.
Well, it's okay for people to believe that there's a shortage in baby formula and tampons, but that there could never be a shortage of precious metals. You know, where I used to live in Minnesota, Target is from Minnesota. The first Target, I believe, was in St. Louis Park, where I grew up. And the one right by my house in Minnesota, my wife told me her friends are saying they're out of tampons. How is that even possible? Out of formula and tampons, Target. It is. Supply chain problems happen, and that goes to show and that's something that women need, right? Well, what happens when people decide they need gold, and it's a very, very tiny pool? With all of this money out there that's been created and all the wealth that's been created and all the asset prices that are distorted, if a very small percent rush to gold, it'll be like trying to find baby formula at Walmart. Good luck. And I really do mean that, and I've been saying that forever, and I get a lot of crap for it because people think I'm just trying to push selling gold and silver, but I'll stick to my guns. I've seen it so many times in this industry where in years past when no one was buying gold and silver, the mints would run out of product in October or November. And there's been too many issues with getting product from an industry that is ill prepared to take on a whole bunch of more demand. So yeah, I think that is an issue and one that makes people wonder, I hope anyway, should I wait for that moment? If you wait for that moment and get it, you'll be lucky. It's kind of like everyone running through a revolving door at once. You got to be the first one through the door or you're screwed.
You mentioned supply chain fracturing. You mentioned retailers not being able to deliver things that they've never had trouble delivering before. We've seen also a degradation in service quality in the delivery of U.S. Postal Service, for example, among others. You've warned us about this. You said when inflation hits, if they try to hold costs, we're going to see service quality go down. It's affecting our clients because those who prefer to go really old school and mail paper checks on their purchases, we have 5 forms of payment that we accept, and paper checks is only one of those 5 methods. But for those who really, really want to mail a paper check, we've said they've got to use priority mail, but the U.S. Postal Service doesn't guarantee a delivery timeline on priority mail. They have a 2 to 3 business day target, they say. It's their goal. But we've had increasing occurrences where things are taking 10 to 14 days to show up through priority mail. So what's our ability to take paper checks going forward? What do clients need to be aware of that may be changing in that regard?
Yeah, we just want people to send it by overnight mail or second day mail at the latest. You've seen a tremendous issue since 2020 with all of the delivery mechanisms, with UPS and FedEx leaving packages sometimes without signature, but yet they're supposed to get that signature. We pay for that signature. In essence, they're lying and saying that they saw Dunnigan and Dunnigan signed for it, yet Dunnigan says, I just came home, it's sitting on my doorstep. That never happened prior to COVID. Now it happens 5% of the time, and that's 5% way too much. Or in this case, the post office, you pay for express mail, and you and I were talking offline earlier about 10 days later, we still don't have a check from one of your clients who sent it express mail, and they track it.
Priority mail, yeah, they say they expect approximately 2 to 3 business days.
Priority. And it still says it's in transit, right? So I think the distancing protocols that have been put into place in the post office pretty much mandate if you want to use a paper check, which is fine, we would really ask that it be sent by priority overnight or 2-day at the latest mail so that we are able to process it and get the package out to the client quicker. I know that you sent me one more question. I think you may have forgotten, and it was from George Henson. It says, ask Andy if the Fed balance sheet would be negative still after valuing the number one asset of the gold certificates from 41.60 to the current 18.26 per ounce. I did a little back of the envelope math, and I hope I don't expose myself as being dumb, but when I looked at the number of ounces that we supposedly have, like 8,300 metric tons, I did the math, and it came out to not even $550 billion. So when you talk about the Fed balance sheet in terms of it being negative, no, it wouldn't be completely negative, but the Fed isn't the owner of that gold. That supposedly belongs to the United States, to the Treasury. And so, but factored against our debt of 30 trillion, forget about the unfunded liabilities, Medicare, Medicaid, Social Security, government, military pensions that push it way over 100 plus trillion. All the gold that we supposedly have isn't even $500 billion, or just over $500 billion rather. So if they ever were going to try and use gold to peg to a new system here in the West, they'd have to raise gold substantially in terms of its value in order to wipe out the debt. It would have to go up a minimum of 60 times from where it is right now. That's why you get people that say gold is going to go to astronomical levels and never come back down, because it would be pegged to a new system. And in order to peg it to a new system, the price has to move much higher. But hey, maybe that's why gold's tier one, the only other tier one reserve asset in the world, because maybe that's what the future plans are. And I quite frankly think that is what the plans are. So anyways, to Mr. Henson, that's the best I can tell you, other than to say the Fed is not the one who owns the gold, so it wouldn't have anything to do with their balance sheets.
I think we've blown away all expectations of the length of a quick weekly market update, because there was so much to talk about, and we addressed so many viewers' questions, which was awesome. We haven't given you a chance to talk about the weekly special that you have for us this week. I understand you got more than one.
Yeah, so we're gonna follow up with what we did last week. I think last week we did the 2022 Britannias at $5 over spot. We're going to add to that the Krugerrand and the Philharmonic 2022 in stock, ready for immediate delivery. All of them at $5 over. 2022 Krugerrand from South Africa, 2022 Britannia from the United Kingdom, 2022 Philharmonic from Austria. All of them $5 over any quantity. All of them come in boxes of 500, and the Philharmonics are tubes of 20. The others are tubes of 25. In addition to the silver, we're gonna do some platinum this week, and we really haven't done much platinum, if at all, with you in the last year. But there's an argument to be made for platinum. You know, it has its role actually in a green world. It is used in electric vehicles and battery connectivity and whatnot. So it isn't just for catalytics. And I think when you look at it in its relation to gold, there's an argument to be made that it has great value. So we have in stock some Valcambi Swiss carded, assayed 1 ounce bars at $65 over the price of platinum. That's a great price for a carded Swiss 1 ounce platinum bar. Those are in stock, ready for immediate delivery, as is the silver. And late this week, we will be expecting 1,000 1 ounce 2022 platinum American Eagles. And those are $135 over the price of platinum any quantity. The platinum American Eagle has been one of the most scarce items, period, since 2008 that we are able to ever sell. And the mintages that we see every year are tiny, 30, 40, 50,000, small mintages. And, you know, if you're looking for a platinum item, that cherry on top of the sundae, the American Eagle is really an amazing coin and has always maintained considerable demand and a high premium, even when you sell it back. So, look, there's nothing wrong with the 1 ounce bar. In the end, they have the exact same amount of platinum, different shape and a different stamp on it. If you're buying just a few ounces, I love the American Eagle. If you're looking to maximize the amount of platinum, hard to argue with the price on the Valcambi bar. You can't go wrong with either of them. So whether it's silver or whether it's platinum, the theme is the same. Both of them massively undervalued in their historical relationship to gold. Both of them, I think, should be in everyone's portfolio. But in my opinion, it should go silver and gold, or gold and silver, whichever way you want to look at it, first, platinum third. So first and second being gold and silver, platinum third. And I think platinum should represent a much smaller part of your portfolio, because when the world thinks about preservation, I don't think they look to platinum quite to the way they do to gold and silver, but it should still be a part of everyone's metals portfolio.
And before we let you go, I wanted to give you a chance to let everyone know that you are going to be personally at the upcoming Rural Symposium on Natural Resource Investing later in July in Boca Raton, Florida. So can you tell us about how people can when they get there, where they'll be able to find you if you're going to be speaking? And I'll mention that I will also be there together with you if people want to meet in person. And I'll just mention that if people want to sign up for the conference, look in the description of this video and you'll get a link where you can not only sign up, but also support our channel. So Andy, tell us, let people know what they're going to be seeing at the conference.
Yeah, so I have 2 presentations there. I'll be there every day. Would love to meet people, have lunch or a cup of coffee, or just sit and chat. And I miss that. That was always fun. For years, Rick used to be the chairman and the CEO of Sprott USA, and now he's off on his own. When I would look at the shows that I would do each year, it used to be less YouTubes and more of these shows that we would do. And I would, the Money Show and Freedom Fest and all of these shows that we would do. The one that I would circle every single year was Rick's show. Rick has, and he's earned it, a paramount of respect in the industry, and he gets the best speakers, he gets the best presenters, and everyone who goes there who is allowed to be there is personally accepted by Rick and no one else. And I've always felt incredibly lucky, fortunate to have a good relationship with Rick and before him, all the folks at Sprott. And that was the one show that I would circle every year. And just because he's off on his own with not part of Sprott anymore, the lineup is the exact same as it was. The best mining companies, the best speakers. And Rick is maybe the best orator I've ever listened to in my life, a wealth of information. So everyone should go. Less for me and more for all of the presenters there and all of the mining companies there. And while you're there absorbing all of this information, Dunnigan and I would love to meet all of you in person and chat. And, we haven't had a chance to meet people in person for the last few years. It'd be nice to get back to a little bit of a normalcy. But this is the one show that I would urge people, if you're ever going to go to a in-person conference and you want the best of the best, and I'm fortunate to be invited to this. I'm not on the level of some of these people that are speaking there. This is the show you want to go to.
I'll mention something about that Rick always mentions when we talk to him, and that is that it's also 100% money back guarantee. He says anyone who attends a conference and feels that they did not get much more than their money's worth, if they write him an email, he says, no questions asked, ask for your money back. He says he's had to give 2 refunds in the decades that they've been running this conference because people are just blown away with the value that they receive from it. We all are looking for awareness, preparedness, and perspective. It's a great place to amass all that, as well as to get face-to-face gut impressions of the heads of a lot of these companies that you potentially might consider investing in, that sort of thing. There's no place like that to meet people face-to-face. Well, Andy, as always, we are so grateful for your presence here on Liberty and Finance for these weekly market updates. This one went well beyond our usual timeline, but just grateful you hung out with us and gave us so much of your wisdom and awareness and answered those viewers' questions. So people, thank you for submitting those questions. Thank you for watching. Make sure you like this, subscribe, share this widely, get the word out. We got to get our friends, neighbors, and countrymen off the tracks before the train comes, and so that we can all not only survive, but thrive together. Andy, thanks for joining us again on Liberty and Finance.
And again, I love you like a brother. I wish everyone out there a great rest of the week. Look forward to picking up where we left off next Tuesday. Stay well.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.